Well, good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday. And we're now at July 26, 2021 at 6:40 p.m. And yep, I'm back from vacation. My first set of videos began tonight. And we'll continue with the paths as we go through them. I think you'll find it rather interesting. But while gone, what has really gone on? We had a big break, as you know, before I left. I took off all of last week where the market got under some key moving averages. To me, the line in the sand on a chart for neutrality and bias is the 18-day average of closes. Neutrality is markets often go there and like to hang for its next position. Bias, when the market is under that number, I have downside bias. Over it, I have an upside bias. So if I have other technical indicators, it's a filter. Keep that in the back of your mind. The event this week that'll dwarf everything else between now and Wednesday, and there will be a lot of economic reports tomorrow. Got Case-Shiller home indexes coming out. You got a series of reports in the morning. But they all take a back seat to the two-day FOMC meeting that ends on Wednesday, and at 1 o'clock we get the Fed announcement. That's Central Time Wednesday, and at 1:30 the Fed Chair Powell press conference. All right. I happen to think that you're going to hear that the members want to and probably are talking about tapering. I do not believe the Fed Chair will let it happen. I think he'll let the conversation go. I think they can even come up with plans. But until the COVID situation is more known, how do you do that? All you wake up every day is reading about more and more cases. The hospitals, we know that about 97% of the people in there are people that don't want to be vaccinated until it's too late, and then they want their vaccine, at least according to the news that you and I watch. But we're now going to get back into the flu season soon enough. What's COVID? What's the flu? People aren't wearing masks. What happens? We have in Chicago this Lollapalooza event, and yet our cases are taking off. Not that serious yet, but getting there. We're at about 135 cases a day in Chicago, and the mayor may put back on mandatory masks if we get over and stay over 200 cases. Don't know what that means. It's only Monday. Don't know if they'll request that at Lollapalooza. How do you control 100,000 people? I don't think it can be done, but that's me. So that's what you're dealing with. Now, as I said, interesting times. First off, notice how the market on a weekly area chart of just closing prices has stayed over the 18-week average, hasn't been under it since back in October of last year. All right? Just got over it and stayed there. Bullishness. So that keeps you in the bullish camp. You've had individual breaks that have occurred. And if you take a look at those breaks and you run the swing line, you get knocked out. For example, you had a position here where the market had a continual pattern of higher highs, higher lows. If you take out this low, you break that pattern, which it did, and then it came roaring back at you, setting new all-time highs now, doing it right now. Okay, let's run a key moving average, the 18-day. What's been the pattern? Patterns are what you should be looking for. How often does this market stay under the 18-day average? You already looked at a close-only chart, but you look at this. And before I left on vacation, I was putting out in my twice-daily research, this market should not stay under this very long at all. I look for a very, can't put enough varies on it, short period of time before it comes running back. This was the longest we did, about a week and a half to 2 weeks. This lasted this time 2 days. This lasted over here 1 day, where it closed underneath that number. This was 2 days, 2.5 days, probably three. My point is it doesn't stay there. And each time it's come back, it's made a new high. Until the pattern's broken, it ain't broken. Where's the market typically go and fail? The upper Bollinger Band. Why? It's an algorithm designed to keep the market trading within it 95% of the time, and it's got a big following. You don't fight that. You use that. So when the market gets up to these numbers, what do the pros do? The first time you hit it, they often come out of their position, but they will look at momentum. And if momentum locks in like it did here with both numbers in the slow stochastic over 80, that becomes a buying condition until that's lost. When it's lost, you often get an indication before a severe break, which is, the word is often, here you come. Be out of your position. You avoided that. Now you're looking to see what happens. Well, you don't have a pattern of higher highs, higher lows. So you're getting what I call bullish noise in the market. It's not pattern trading. It's going from a lower band to an upper band and running out of momentum both ways right in front of an FOMC meeting. When I look at the NASDAQ, the story's no different. You got under the band. You don't even get under them back here very long. This stayed weaker for longer back in this period of May through June. Since then, it's gotten stronger. So the S&P's been a better pattern chart than the NASDAQ. The NASDAQ is constantly going through the rotations, as you know, of, gee, we're coming out of COVID-19, let's dump that, and we'll go to the other growth stocks. Netflix is going to lose people, blah, 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 right? Then you get to the point where you get the variant, and suddenly maybe we're not going back to the office. Maybe we got to buy those FANG stocks again. That's what you deal with in the NASDAQ. In the Dow, this is not as strong as the S&P either. It's at an all-time high, so don't get me wrong. It's strong, but it's not as strong as what the S&P had done, and it didn't follow that pattern as well. The best pattern to have followed was the S&P, and it's still working. Where the weakness in the market has come in is in the Russell. It's got a bearish crossover while I was gone, where the 18-day average in red, and this is the green, this is Wednesday, the 21st. Here you are on Thursday. Here's Friday's action. I'm back, and the market coming down, as you can see. Okay, so you had a lower low through here. You haven't taken out these lows. So I think this market's saying, I don't think I'm going to fall apart on you going into the report. I think I'm going to wait and be patient. VIX cash. If you study what the VIX has done with Bollinger Bands, you'll often see that if you hit these lower bands on a regular basis, you go back to the 18-day average of closes. I can turn around here. You'll see it through here. I think the pros are aggressive put writers when you get down to that number. They write to a degree the calls when you hit the upper band, but you have to take a lot more heat because you get the spikes. Why are you getting the spikes? Because volatility has a tradition over the past several years, minimum. I can go back maybe closer to 10, where you keep falling in the VIX. You've been down to numbers into the 12 area. So that's not much volatility, but when the market gets nervous, it gives you a big pop. So there's a lot more risk there. The risk on the downside just hasn't been showing it where it keeps falling down much under that. There is no such thing that past history guarantees the future. These are observations. I teach how to trade all this in my morning subscriber video and in my courses, and I'm very aggressive with it. In the 30-year bonds, you've got a pattern of higher lows, higher highs, a bit of a correction, logical in front of the FOMC meeting. Momentum had turned down, and when it turned down and got away from being overbought, and that was overbought, it never did embed with both numbers, the red and the blue, going sideways over 80. Well, corrections in momentum, market stalling. It wants to see what the Fed does. 10-year note, same identical thing. Got overbought, correcting, still in an uptrend. Neutrality's going back to the 18-day average on this chart and this chart. That's what I would say. In the dollar index, when I was gone, I'm reading and watching, and I do watch TV when I'm gone, financial TV, who doesn't? And I'm listening to these people, oh, it's going to break out in the dollar, it's on its way. And I'm looking at the Bollinger Band going, suckers. And it has pulled back right here. The eurocurrency, if the dollar was bullish, well, this is going down to the depths of hell, right? It came back to the 18-day average. Give the market a chance. You're going into some important numbers on Wednesday. You want to see what that does. The British pound, well, they have been hurt by the Delta variant. They've come back. Trend is up. Support, as I see it's right through here, 137.86. To break the uptrend, you'd have to take out 137.21 with very stiff resistance, 139.17 to 24. Bitcoin. So as I said, you wake up in the morning today, wake up in the morning. You know that song? I love that song. And Amazon ran an ad for a cryptocurrency specialist. I thought it was Apple in the morning update. It was early for me. It was this. And away you go. And again, I yelled, suckers. Told my people that too. Said, you don't buy over a Bollinger Band. This is what's already happened. You're pulling back in it. Now, why they're doing that, I can't answer. I don't know if they're going to just study it. I don't know if they're getting ready for eventually a cryptocurrency play. I don't know if they'll do whatever. But the fact that they did it made everybody go, Amazon's going to take Bitcoins. Okay, that's a big jump from hiring a specialist to doing that. In Brent versus WTI, I've moved to the Octobers. So neutral is $1.03, the 18-day average of closes. And you've been trying to stay over that, which means Brent has been stronger than WTI. All these markets are fighting a battle at the 18-day average. They got caught in here. They broke out to the downside, went to the 100-day average. In the process, you were 2 days under the Bollinger Band, snap. Right back. Everybody punished. That's the big breakout. We're going down. No. And in fact, if anything, right now, the chart is trying to be bullish. It's coming up. You've got a pattern of higher lows, higher highs. So until today's low of 72.07 is taken out, I think the bulls have control, trying to drive the market to higher levels. Are we overbought? Yes. Any reading over 70 is overbought. WTI crude. Battleground, 2 days under. Again, hit that. Again, I was out of town. Comes right back. No surprise to me. So you tried the downside, you did the flush out, you're back to a neutral territory, and tell me, honey, what's COVID doing? Because that's going to drive this market right now. We go to gasoline, still bullish, still the driving season, but get ready because we're going to be in August before you know it at the end of the week. That gives you another solid driving month, but then after that, the kids go to school, car traffic dies, back for the traveling that people do into the business life that they have. But remember, you still have to deal with gasoline, heating oil, what the planes can do. Do they have enough pilots? People want to do things coming out of all this. I discuss that and a heck of a lot more in my morning futures video, where I cover 40 futures markets, all the segments, be it the stock indices, the currencies, the interest rates, the metal markets. We go from there into the meat markets, the grains, the softs, and the energies. The tapes, one tape, it takes about 20 minutes for me to record it. I post it. It's typically in my subscribers' hands where they can view it with the notice. I send out text message and I send out an email. Text in the United States and North America. I try to get it out there. I don't do it abroad. But to make a long story short, they typically have it in their hands at 6:30 a.m. They know already what I'm looking for, what's happened in Asia, what's happened in Europe, what the chart action is, what the news of the day in those countries are, the upcoming U.S. reports, what the market is looking for, my thoughts on what it's going to do. And then the trade ideas, because I am aggressive. And I say, I want you to buy here. I want you to sell there. If you want to know more, just go to our website under the word research. There's another video there that explains in detail. You can sign up there and away you go. For $7.95, you're going to get 30 days, 24 videos from me, weekly charts typically that cover the long-term trades and then the shorter day trades. I am a swing trader. A swing trader is not a day trader. I can be in a market as long as it's good, and when it's not good, that's it. And keep in the back of your mind, the leverage in futures is 90%. The trades are typically shorter duration than they are in markets like the stock market with 50% maximum margin. By the way, they're cutting back margins on cryptocurrency. Some of the firms are now removing that 125% that you had. I mean, 125 times, not 125%, back to no more than 20 or 25 times the margin. Yeah, it's still phenomenal leverage. Think about it, but it's the way they work. I'm Ira. I'll see you tomorrow.